is an update and technical analysis on 1847 Holdings, a company of the industrial sector and conglomerates based upon the daily interval. And just a day ago, I had issued 5 stocks that have experienced breakouts on their daily intervals, signaling long trade setups. Prior to entering any trades, assess your risk-reward ratio, projected targets, and determine stop losses before entering the trade. Plan the trade and trade the plan. And that was a beautiful, well-defined, bullish falling wedge pattern based upon, once again, the daily interval construction of a well-defined, huge divergent low. We had positive, big divergences on all 3 key technical momentum indicators with a confirmed green-infused candle breakout above the oscillator histogram's zero-line threshold. It was based upon which would call a price action breakout of a primary downtrend line, call it multi-year price resistance, and that had a validity of a multitude of major reactionary highs across the entire space here. And that was just a pivotal inflection point, gearing up to test its 50-day and 197 price resistance up above, called a triple transitioning price support, and begin to scale an in process of a long trade setup, going on to re-challenge the 235 price resistance target and the 318 and ultimately 376 final additional target up above. And here's the update. And with the entirety of the trade from the 193 spot price, zooming in for any long traders and especially day and active traders, backtested the 197 price support really to the button, offering a great risk reward long trade setup to the upside for a day trade into the after hours close. That was good for 43% in gains to the upside. And coming back to what you would call the basis off backtesting that inflection point, 310 was the ultimate major reactionary high intraday, and the entirety of that trade thus far was good for 52.7% in gains to the upside. And it may be time to begin raising your stops and recovering profit based upon your risk tolerance and or management and balance of your portfolio. And really what was baked up as one of the most beautiful bullish falling wedge patterns, bullish as you could possibly get, with an oscillator green candle close that hasn't been seen here going back since the previous time span of October of 2023, which preceded a complete gap up to the upside for 110% in gains. I believe we've caught this major, big, short squeeze rally to the upside, only infusing a ton of panic buyers and or FOMO traders. And what could unfold is a scenario where the current squeeze or rally escalates into something far more significant in magnitude to the upside, especially taking out what you would call the 318 price resistance. And that is a validated psychological level where I believe the ultimate pinpoint and or biggest major key inflection point is breached. You will begin the process of squeezing out a ton of more shorts to the upside, ultimately gearing up for a confluence of technical bull traders and or FOMO traders, potentially squeezing, ultimately potentially retesting its 200-day moving average, which would be another 488% in gains from here. You could focus in on collecting and covering some free shares and gunning for the big home run to the upside.